Hey there, everyone. Hope you're having a great start to your week. Just want to send across my weekly market update for the week of May 11th through May 15th. So, jumping straight into the big picture weekly market headlines. So, we are in the peak of the spring buying season nationally. Weekly pending home sales hit their highest point in 2026. This week in history says that they will ease from here. So, if you want to sell your home, now's the time to put it on the market because it's the best buying season in the calendar year. The market is performing better than 2025 across nearly every measure, even when the rates are still elevated. I'll touch on the rates a little bit later and the slides to come. Inventory growth year over year has dropped under 2% and could go net negative within weeks. So, like I said before, the strongest buying activity of the entire year is happening right now. So, put that home in the market if you're thinking about it. Inventory and housing supply, national single-family inventory did move from 761,000 to 767,000 this week. So a lot of sellers are, taking advantage of that peak selling season. Year over year, inventory growth is now 1.49% compared to 33% growth at the same time last year. We could see fewer homes available than this time in 2025 within the next few weeks. New listings coming around 73,000 to 74,000 this week, still below the average 80,000 to 100,000 range, which is considered kind of healthy. Earlier in April, we did come across 80,000 new listings in a single week, the earliest that we've seen that happen in at least 2 years. So, we're still kind of adjusting post-COVID to normal market, but it's slowly normalizing compared to what it was a few years ago. Sellers are not under financial pressure. They will sell if they hit their number and hold on to it if they're not. Obviously, we're seeing a lot of sellers have lower interest rates and kind of wanting to hold on to it a little bit longer than historically we have seen in the past. And then when it comes to buyer demand and pending sales and cancellations, so mortgage purchase applications have been up year over year for around about 14 straight weeks. 9 of those weeks showed double digits gains compared to last year. Weekly pending home sales came in around 78,000, slightly off the 80,000 from the week prior. So we did see a little bit of a dip off, but nothing crazy. This is the peak window of the year. Pending activity will gradually ease from this point further as we go closer and closer to summer. Buyers are active, but they're kind of measured and kind of calculated a little bit more than they have seen in the past when it's more of a seller's market. Global uncertainty and rates are keeping some of the people on the sidelines, which is we've heard a lot in our own personal experience in buyers. And next thing is pin-up demand is real. So when conditions improve even slightly, buyers are going to be moving on to the market. So first-time buyers and the rental market. So about 36% of homes on the market have had a price cut, nearly identical this time last year, which was 35.8. Their sellers are not panicking. Most of them are stable financially positioned and willing to kind of wait and make sure they get that number. Typical seller profits nationally fell around about 44.1% in Q1 2026, down from 50% of the same time last year. Peak profit era of 2022 is going to be 63, which is well in the kind of rear view mirror. Sellers' profits fell in 74% of major metros area quarter over quarter and is over 80% year over year. New construction median prices dropped to around 387,000, now below the existing medium home. And then as builders kind of offer incentives to try to move inventory. So what does this mean for like buyers and sellers? So for buyers, obviously, like I said before, the peak window of buyer competition is happening right now. So the more people are actively searching than any other point in the calendar year. Rates kind of are in that kind of low sixes. We are seeing around about 6.37%. It's better than it was last year because we did see around about 7%. In the spring of last year. So the rates are lower than they were a year ago. Down payment assistance is widely available. Nearly 80% of Gen Z's buyers use some sort of form of help in 2026. So you don't need to run about 20% to buy a home. There's different ways that you could go about it. And, obviously we're happy to put you in touch with the lender and kind of, go through those processes and see what you can afford in the different ways that they can provide assistance on that. 68% of Americans believe homeownership is achievable without family wealth. The right agent, the right tools can make that happen. Obviously we're seeing a lot of tension in the Middle East right now. Well, once that resolves and rates drop, more buyers will flood the market, and the market, will be a lot faster moving. Moving now kind of avoids that added competition from those buyers kind of waiting on the sidelines. For sellers, the most active buyer pool of 2026 is searching right now. So, views on the listing portals are the highest in April and early May. 91% of sellers still use an agent. So the ones who get the top results combined with smart pricing and strong marketing, obviously that will help you get the best sale possible. Sellers' profit are still solid, but they are shrinking right now. So getting it priced right from day one does matter. 36% of homes are cutting price, which means 64% are not. Correct pricing from the start still works. If you have been thinking about listing, the window where buyers are most engaged, like I said before many times on this video, is right now. So I'll briefly kind of touch on this. I'll kind of touch on it more in the next slide. So we are seeing the Freddie Mac 30-year fix come down to 6.37% for this week. Rates did spike up to 6.56 earlier, but they are cooling off a little bit. Like I said before, this time last year we were in the 7s, and then all the other items here are going to be adjusting as well. So the income needed to afford a typical family home right now is around about just above $90,000. Affordability is still number one challenge for most people, and we're also not expected to see a rate cut until at least September 2026. So I'll just finish off the video. Obviously, this is from today's mortgage rate snapshot. So we are seeing for the 30-year 6.42. And then also we have seen some adjustments on the 15-year FHA, Jumbo, ARM, and VA as well. But it is looking a little bit healthier than it was this time last year. So hopefully they keep trending in that direction. But like always, any questions, please feel free to reach out to me. I'm happy to kind of jump into your specific market and kind of go over any questions you have. But anyway, have a good rest of your week, and I'll see you next one.